There's a number sitting on your loan estimate right now that could be costing you thousands of dollars, and almost nobody stops to check it. Two lenders can quote you the exact same interest rate and still hand you wildly different deals. I'm going to show you exactly where that gap hides. Welcome back to Mortgage Story, where we go over real loan scenarios for real people. I'm going to explain the framework behind decisions that need to be made during a mortgage application that can save you thousands of dollars if you know where to look for those savings. Today, we are going over how to compare loan offers and how I recently saved clients of mine $3,800 by explaining charges that were hidden in plain sight. Okay, let's get started. My name is Scott Stavis, and I'm a mortgage broker with over 20 years of lending experience across all channels of lending. Today, we will take a look at your APR versus your interest rate, what the difference actually means for your monthly payment, and the one comparison trick that exposes hidden lender fees before you sign any paperwork. Let's start with the rate everyone already knows, your interest rate, sometimes called the note rate on a mortgage. This is the number written on your promissory note, and it's what your monthly principal and interest payment is actually calculated from. If your rate is 6.5%, that's the number the bank uses to figure out what you pay every month. This is the number lenders quote you on the phone and the number that determines your real house payment. Now here's the number people skip right past, generally because they don't understand it. The APR, or annual percentage rate, takes that same interest rate and rolls in certain closing costs and lender fees, spreading them across the life of the loan into one standardized yearly percentage. That's why the APR is almost always a little higher than your interest rate. It's not a rate you pay month to month. Think of it as the true cost of the loan, standardized by federal law, so you can easily compare loan offers from competing lenders. If this is making your loan estimate finally start to make sense to you, hit the button to subscribe to Mortgage Story. I break down one mortgage myth like this, or cover one mortgage and real estate related topic each week. Let's get back to it. Now here's a basic side-by-side scenario to have a look at. It is a sample of two loan estimates, each for a $400,000 house purchase with 20% down. Lender A quotes a 6.5% rate with a 6.597% APR. Lender B quotes 6.375%, which looks better at a glance, but their APR comes back at 6.668% because they're charging thousands more in points and fees to buy that rate down. If you only compare interest rates, lender B looks like the winner. Once the fees baked into the APR show up, lender A is often the better deal, especially if you're not keeping that loan for the full 30 years. That's the scenario I opened with, and that's the trick. Never compare rate to rate. Compare APR to APR. So which number matters more? Well, both, for different reasons. Your interest rate tells you your actual monthly payment. Your APR tells you the true cost of the loan if you keep it to term, fees included. And the catch? The APR assumes that you keep the loan the entire term, which most people don't. If you plan to refinance, sell, or pay off the loan early, a low rate option with a great looking APR but high fees can cost you more in the short run. The move is simple. Compare the interest rate, the total fees in dollars, and the APR together. Never look at just one number in isolation. I recently worked with a couple comparing three lenders on the same rate lock date. Two had nearly identical interest rates, but a $3,800 swing in fees, invisible until we lined up the APRs side by side. That's the kind of gap a same-day call center quote won't catch, but a real conversation with a mortgage broker will. If you're shopping lenders right now and you're not sure whether you're comparing apples to apples, that's exactly what a discovery call is for. I'll pull your real numbers side by side, rate, fees, and APR, so you know exactly what you're getting before you lock anything in. The link to book a call is in the description of this video. If you found some value in today's episode, I am going to kindly ask for two things. Number one, please click the thumbs up button below this video and also subscribe to Mortgage Story. It's free, and those two clicks will help me grow the channel faster. In closing, every home has a story, and I'm here to help you write it. So from wherever you are tuning in from across the USA, good afternoon, good evening, and good night. My name is Scott, this is Mortgage Story, and I'll see you in the next one.